Good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, August 1st. Welcome to August Trade. We are just getting the print of US PCE, the personal consumption expenditure core, coming in at expectations 0.1%. Year on year, topping expectations with a print of 1.5%. Expectations were for a print of 1.4. You also saw an upward revision to the previous print from 1.4 to 1.5. So decent data on the block here. Personal income slightly weaker than expected, 0%, pretty flat for the month of June, while the previous read was 0.4%. But largely the main takeaway here, guys, was the PCE, obviously the Fed's preferred gauge of inflation, with a stronger than expected print of 1.5% here, largely going to be supportive of the dollar. So, start of a new month. Good to be with everyone here in the room. And now that we got the data out of the way, we do still have on tap later in the US trade session ISM data released at 10 o'clock. We get manufacturing ISM coming in 56.5 is the expectation for the July print. So, D, good morning to you. Karthik says good morning all. Good morning to you as well, sir. Kelly, Mark, Pete, Steve, Ziad. Won't get through everyone here today, but good to see you all here in the room. So we have still a couple of major key event risks on tap. Thursday, Super Thursday, as it's called, you get the release of the BOE's interest rate decision and their quarterly inflation report. We got the RBA last night. We'll talk about the implications of what they said. And then obviously on Friday, your double whammy employment report. You get the U.S. Non-farm payrolls, as well as that CAD report. And with dollar CAD is trading, I do think that's going to be a very interesting trade heading into the close of the week, specifically on those Super Fridays, I call them, when you get the release of both employment reports from both the Canada and the U.S. So we'll take a look at those. The trades for today, obviously we'll cover the DXY, which is continuing to push below a key level, but I'm not buying it still, Well, I'm not convinced, I should say, still, that we're making the break. So we'll take a look at that. Euro dollar from yesterday, Euro Kiwi from yesterday, pound yen. From the previous night's report, we'll go over those dollar CAD levels again. Gold, Aussie yen, Kiwi dollar, and a quick look at Ethereum, which finally made the break to the top side. And again, those levels look pretty clean. Anything you didn't hear on this list or pair or trade setup you'd like to review, as always, feel free to stop me, guys, and throw your questions on the message board. Okay, let's jump right in. So, first things first, Karthik, you want to add crude? I got you. Kind of went through that 618, but we're trading back below it. So I'm kind of looking to see if that holds or not, but we'll take a look at crude. But the dollar index. So you guys remember the weekly chart for dollar index. To this week's close, obviously, is paramount, which is why I'm saying I'm not really convinced that we're making the break. Remember, when we make a break of support, you want to see the market run, okay? You want to see a cascade effect. You don't want to see us kind of get stuck there and sit, kind of like you did when you broke this line, the 618 line, or I think this is the 38, what is that? 38.2 line. Support, break, you saw acceleration, resistance. The median line itself, when we break, you saw acceleration, okay? Even on the way down, right? You got a quick reversal on the following week, and an outside week reversal it was once we made a close below that. So my point being is that you see reaction accelerate or do something. Here's what the daily chart looks like. So on a weekly basis, you're still really focused on that 93.13 region of support. Excuse me. And we want to see if we close the week above or below that level to really determine the next leg here. In such a scenario, the next move lower, you're still looking for 91.93, a basic 38.2 retracement. This is off the advance from the lows you made in 2011. And it converges on the 38.2 line, which was a nice pivot on the top side. Only makes sense for it to be a nice pivot on the downside. Daily chart looks like this. Okay, we did add a target. I think Jamie's looking at it too. The lows that he made here in 2015, specifically in August, that gives you about 92.62. That's sort of a next area of which you could see a pivot. It's really close to the close lows for the close low. Try saying that 3 times fast for last year, right around 92.60. So next area of interest, let's say for support, if we continue lower from here. Couple things to note. A, you're getting some divergence along these lows. Bring it into a close. See what the line chart says. A lower low, a lower low, series of higher lows. Now, as I always note, these divergence points below 30 or above 70 are going to be your weakest signals. So it's nothing I want to actually act on, but it's something I definitely want to recognize, okay? The break back above 30 here would suggest you have a little bit more of a recovery on hand. Ultimately, we'd be looking to sell a larger recovery in the dollar, but near term, I still think it's at risk. You know, I can't really get excited about short dollar exposure from here. Here's what the intraday chart looks like, and this is the reason why. So let me bring the 240 in view here. So we were looking at this pitchfork, right, that we were working with off the highs from June. You saw the break to the downside. That same median line support offers some resistance. Now, within the confines, there's this embedded channel. Remember, these steep channels, typically you don't want to really stress too much. Usually it's the deader gradient or the deader slope will be the one that'll tend to offer a little bit more guidance and price action as it did here. Long story short, that channel that you see here in purple, support last week, that was the low, and here's the reaction that we saw yesterday. Initial resistance, 93, 2016 low day close. And then the weekly opening range high is at the June low day close, which is a level that we've been looking at, 93.50. We're going to bring down our near-term bearish invalidation level to, that's not what I wanted to do, to here. Okay, this is essentially the swing highs that you saw late last week. 94.08 also represents the low that you made in August. And that converges on channel resistance. That's the break that would suggest you have a much larger correction in hand. Right now, the focus is on this near-term slope support and the 2016 low day close near-term resistance here at 93. Questions on the dollar index? So I wouldn't get too aggressive trying to press, let me put that target there as well, the 92.60. And feel free to take a snapshot of this if you need this for future reference. Okay, that is the DXY. Implications for the euro. Well, here's what euro looks like. So I'm not going to lie, I'm an aggressive trader. I'm already short. I've been short since yesterday. At this point, my stop is right against the highs. So I'm trying to see if we can just get a decent pullback. My initial targets are sort of right ahead of these highs. I'll take a little off the table there, and then we'll reassess to see if we get the broader pullback. But look, I wouldn't necessarily recommend you guys do that, but here's the reasons why. Again, I'm going to take you to the weekly chart for the euro, which we haven't really looked at here. But here's what it looks like on the broader, larger scale. Okay, pitchfork off the low. This is the one that we have on the daily chart. Off the subsequent high that we made in 2016, and then the low that we made this year. You can see again, that 50 line offering break, gap higher, launch, median line, break, saw acceleration, basic trend line resistance, again, the break, saw acceleration. Here we are with just a basic parallel extending off these highs. It already has 2 touches. we're basically testing that right now. So today's, or this week's, excuse me, close is going to be important. On an intra-week basis, I wouldn't be too surprised if price stretches into the 2010 low, and that gives you 118.76, just a bit higher. So you can envision a scenario in the euro dollar where it spikes into 118.76, but we close the week below this trend line, and again would risk just a near-term correction in the euro before continuing higher. It's always a tricky business trying to call highs, guys, and I always want to be mindful of that. Specifically on these webinars, we're talking about real near-term price action, so I don't want to start encouraging people to start fighting the trend, because although it might work sometimes, broader on the longer term, you're not gonna, it's not going to be a winning strategy. But as I always say, it's important to recognize, when you're at an area where the trend is vulnerable, and I think near term, I might have been saying that already, but we're there. So the weekly chart, keeping this in mind. Going to the daily chart. Even on the near-term approach, within the confines of just the ascent off of this year's low, we've been following this pitchfork. This shouldn't be new to any of you here in the room. Again, the breach, basically on a closed basis, saw that hold as support, and look where we closed yesterday. Here's price action pulling back. So again, I think it's worth a good 20, 30 pips to the downside. I actually haven't been in the profit that much since I got into the trade, so I'm hoping, again, to get that pull a little bit lower. But it's something I'm super nimble on, right? Tight stop. If it works out, it works out. If it doesn't, it doesn't. 1876 is going to be that 2010 low. And again, that's sort of an area I wouldn't be too surprised to see intra-week price action spike into. On a weekly close basis, on a daily close basis even, I do want to see us respect this median line, or the upper parallel here. Also another tell, watch the momentum indicator here for a break below 70 to further suggest that you're on track for a little bit of a pullback in euro. Ultimately, we do want to be on the long side. If we do get a larger correction near term, you even have a trigger there I would kind of just keep an eye on in momentum. Intraday, here's what euro looks like. And here's what we looked like last night. Okay, so we're basically in that same zone of resistance, the larger median line parallel, or the upper median line parallel, as we looked at on the daily chart. Within the confines of that, you even have a near-term channel just off the lows. You could see multiple touches of resistance, really super clean. That converged and really caught even the spike high we made yesterday, which is another reason, confluence resistance is kind of a little bit more comfortable trying to press against the broader trend here. So you're testing that pivot that we were looking at. Again, this is the same target, 118.10. Again, that's sort of the first initial place you'd need to break. Watch that swing high, 1776, 1778. And then, again, key confluence support and broader or near-term bullish invalidation, I should say near-term, would be 1714. That's basic channel support and those swing highs. From what month was that? August 2015. All right, so the level's super clean. Let's just see if we can't get momentum starting to give us a little bit more of a turnover. If we break higher, again, on a spike basis, you still have to respect that 118.76 level, okay? This is the level of which, like, if we clear it, sayonara. I'd be looking for a larger recovery, or a larger push higher here, a much steeper push in euro dollar. Next upside target, by the way, if that were to happen, is basically like 2040, 2050. Any questions on euro? Okay, that is number 2. Number 3, a quick review of Euro Kiwi. Sorry guys, excuse me. I've been losing my voice for like weeks now. Uh, Too many webinars, maybe. So here's what the advance is doing. Initial resistance 157.77. That's exactly where we were last night. We were looking to buy pullbacks, stay constructive while above 156.60. Here's the break. Next upside target. If you're holding the longs, I would still be holding them. I wouldn't necessarily want to jump out of that trade just yet. This trade is more contingent on a pullback in Kiwi. And I've been looking for the Kiwi pullback. You guys know where I stand on that. That thing has kind of been the abomination, the bane of my existence for the last couple of weeks, just because the thing just won't turn over. But we went into a major resistance. It started to react. It continues to hold. And if it pulls and breaks lower, this is a good way of playing Kiwi weakness, I think, while at the same time hedging any short exposure that you might be holding on Euro. So we continue to favor the long side here. The basic premise of this trade, again, here's what the update looked like last night. Basic premise of this trade was, look, you're coming off long-standing yearly trendline support. Okay, it's the same slope of the advance off the yearly low. It's just a sliding parallel from the lows that you made there. What is that? In February, I guess, late February. Close basis was very clean on the rebound here in June. Then even on the spikes, right into that support zone, hold. And here's where we opened the week, noting that, hey, we're right at that support zone. Now you got the 100-day moving average in there as well. So we inherently started to look higher. The initial target, like I said, that's coming up is 158.38. That's just simply the July high, nothing to be too crazy about. But the 50 line is right in that region as well. And then the bigger area is this. Not so much because it's the 50% retracement. Obviously, we sailed through it here back last year. This is from the decline off the highs we made in 2016, by the way. And not because it's necessarily the 2016 open, but if you just look there inherently, price has seen a very decent pivot. More or less support, but the break saw acceleration. Definitely was resistance on the initial approach, got a little messy, break saw acceleration. On the way down was support. Break saw acceleration, tested it as resistance. We started off, last month, testing it again as resistance, and that's really the level to beat. Not to mention, last month's opening range never really gave out. Here's the open for a July trade. You made a high, you set the low, and you stayed within that range right into the close of the month. So when we get that, typically the following month, all you're looking for is to breach or clear the previous month's range. I don't have to wait for a new opening range to set in Euro Kiwi. Once we clear the previous month's range, that inherently will be my sort of opening range break signal, if you will. So that's all to say, guys, further highlighting this region of resistance into 159. Okay, so the broader chart, pretty clean on Euro Kiwi. Again, I would love to play this to the upside. That requires Kiwi weakness. Again, that's sort of been the thorn in my side this month or last month in July. But here's what the intraday chart looks like. And here's what the intraday chart looked like yesterday. We had just made this topside break. I didn't want to have the 100% extension on there just for the clarity of the chart, but I did note it, in the piece. So I was kind of needing to see price really establish above that region because you do not want to see this be two equal legs up and correction, or rather that screams correction, which means the broader trend is still bearish. So this was an important break. And now that we've pushed through, you're looking for the initial targets, 158.38. 618 is 158.50. Watch that zone first. And then 159, guess what? Even near term, it ends up being the 100% extension from the advance off the lows we made in July. So it's pretty ridiculous how much lines up at 159 in Euro Key. Questions on this setup? Still like it. It's still pretty clean. Let me just snap these levels for you. There we go. The 50 line of the advance here also converges in that. Now that pushes the target out until like the 3rd. So, Thursday heading into Friday would be where you'd expect to see 159 be reached. Bullish invalidation, you want to kind of keep that right around here. Last night I cited 156.26, but you kind of just want to basically look at this slope here and the convergence of the upslope. So right now that's around 156.50. But still looking higher here in Euro Key for now. Any questions on that pair? Let's see if we can't get some Kiwi weakness. Sterling yen looks like this. One of my favorite trades. Obviously, we got the BOE on tap, Super Thursday, where we get the inflation report and the Bank of England inflation, or the interest rate decision and the inflation report, rather. Here's what the daily chart looks like. There's not really much to talk about here. The 2015 trendline resistance is the major focus. We've gotten multiple touches. This completed a 4th touch. This was actually a 5th touch. Today would be a 6th if it holds. Ultimately, we're looking for this to break out. The big area of resistance for the broader trend to really kind of stretch its legs is 147.86, 148.40, this zone here. This is what you really need to clear to give you the break. Guess what? Same exact thing. It's last month's opening range high. So objectively, and for that matter, the May high, objectively, once we clear this range, you're looking for a breakout type of trade. First things first, you're coming up against near-term resistance again. Here's what the intraday charts looked like last night. We were talking about 145.90, a little area of confluence resistance, the 50% retracement. You had the upper parallel, but we've seen a break of this upper parallel before, right? So you can take a sliding parallel, the same slope, and just extend it into that region off that high, just to keep your eye on that. That sort of highlights an area of which we need to crack to get the upside break. Well, here's how it played out. It did stretch into that region before pulling back. And this is why you want to keep these sliding parallels in view. Okay, so here's what the intraday chart looked like yesterday. We popped right through this, pulled into that trend line, pulled off, and found support where? At that same slope. Ideal scenario. So simple break of resistance, check it as support. Now it puts the emphasis on a break of this high to continue the trend. You'd be looking for 146.34, 146.73 as initial topside targets. In such a scenario, okay, you also want to take into account, bear with me one moment, this extension. Just want to see where the 618 comes out. 618. Yeah, nice. How do I make this a little bit clearer? Bottom. So that gives us even further highlight here. 146.35 into 146.39. Look at that region as an initial area for the breakout as a target, and then subsequent upside levels. But looks pretty clean. Looks pretty clean. And I love where we found support. We kind of do need to hold that low. If it breaks back below it, this could be a simple throw over, run into resistance and a pull right back. So I'm going to curb my appetite if we open up today's session and we go sub 145.80, let's call it. But right now, you're looking for confirmation of the breakout, and that would need us to clear that sliding parallel here in sterling yen. BOE is on tap. I kind of like this better than sterling dollar right now. So if you're looking for a sterling cross to focus on, My humble opinion, this one looks a little bit cleaner as far as price action is concerned. Any questions on pound yen? So we'll take a quick look at sterling just for the sake of it. It has made a break above the 32 handle and slope resistance. So remember we were talking about this slope. Well, first of all, we were talking about the risk while below that red line, which is just a sliding parallel, which has offered some really clean pivots. So we opened the week basically there. Look what happened when we cleared it yesterday. Acceleration. Look where we're finding support since at the median line. As long as we stay above the median line near term, think you look higher. 132.72 is the next upside target in pound dollar. Here's the pound on the daily chart. Again, no change to any of those levels that we've cited earlier in the week. Questions on sterling? We'll go over this again tomorrow, right ahead of the BOE, get a cleaner picture of what price action is doing. But if the dollar starts to, recover a little bit, that's where this thing could at least see the top side limited. But broadly, I do, want to stay constructive on the pound. Okay, moving right along, dollar CAD. My dog, dollar CAD. Here's what dollar CAD looks like. It's still holding that major key support zone, okay? And it's pretty important in that you saw initial reaction really strong. Here's the daily chart look like on Sunday. 124.15 was the level that we were talking about. The 618 extension from the decline off of last year's high. The swing lows that you made from May came in at 124.60, and then you had a basic, just parallel here coming in at that same level. Same thing with the slope off the high. Some parallels here have been offering some sick pivots. Okay, support, the break, saw acceleration, all converged right at that level. So look, man, again, calling a low is never smart. You never want to get aggressive on trying to play the reversal per se, but for a near-term guy like me, that's screaming, you got to see some sort of reaction. If we break below that, my concern is still that you still have this 2012 trendline support, which is just lower. So you can envision a scenario again where it washes out everyone who's trying to play the reversal into that trend line and then pushes higher. I don't know. As a disclaimer, I don't have any positioning on the dollar CAD just yet, but I'm definitely looking for it. Here's what the intraday chart looked like. We were following this slope for quite some time. The break again saw acceleration. Continued to hold along lines of that same slope. Here's where the Sunday open looked like. Initial resistance is basically Friday's high, or last week's high, I should say, in dollar CAD, 125.76. Here's what the intraday chart looks like now. This is the 120. And here's what it looked like earlier in the week, rather. So you're seeing nice little upslope here, not too much momentum starting to gather pace, but guess what? This is the first time the momentum signature has started to find support along the lines of 40 or ahead of 40 in I don't know how long, right? You saw a little bit of support here as we flatlined, but obviously price is not doing that. So this is basically the first time we're doing it since the highs, basically. You got a little bit of a recovery there as that thing held, but you get the point, right? So you're looking for a little bit more of an assertive move in momentum. I think the opening range at this point, feeling pretty comfortable, is if it starts to set and hold this into the close of today's session, all the more reason. If these highs line up with this median line, all the more reason to look for this to be the break to the top side. But as it stands right now, I'm still going to need last week's high to sort of give way for us to start getting a little bit more of a constructive approach on dollar CAD. But you're at a big, big support zone. And there's that longer term trend line that we talked about. Currently it comes in somewhere around 123.30. So even if we get a downside break, look for a reaction there. That's really the level of which if it gives out in dollar CAD, I mean, on the daily chart, I don't really have anything until like 120.50. Maybe this median line here into 121. But a big area, a big sort of gap zone here if we really start to break down. That being said, I'm looking to fade weakness in while above basically this 2012 trend line. Questions on dollar CAD. So obviously the implications, everyone always wants to look at. I might as well just jump into the crude question for you, Karthik, right now. Here's what I'm looking at with crude prices. I don't really favor the charts so much. My slope is getting all jacked up. What the hell is that? Not really sure. So my intraday chart isn't as clean. Typically when I don't have a clean picture on what's going on intraday, I'll shy away from it. But here's what the daily chart looks like. We made a perfect tag of the 618, and specifically on a closed basis. We closed yesterday's session at 50.16. The 618's at 50.18. It's pretty on point. And this is the 618 that covers the entire yearly range. So is it worth a little bit of a kickback to support into 49? Maybe the 200-day moving average, 49.30? I don't know. Basic trendline resistance off the yearly highs still has a little bit higher to go. Confluence with basic former trendline support off the April 2016 low comes in at like 51. I don't really have a strong opinion on this, Karthik. But near term, if you were to get a kickback off this region, you can envision that giving us a little bit of that pop in dollar CAD that we're looking for. Not that you want to correlate them, per se tit for tat like that, but would make sense. Would make sense. Karthik, does that help? Does that make sense there? I was in the webinar you were running here in June. I called a short to you on dollar CAD at 137. Very nice. Yes, you said you liked it. Let me see here. Yes, you said you liked it. And since that day, I'm still short, says Kelly, the pair. I'm looking for 123 to close the trade. 123. Okay, let me ask you this, Kelly. What do you have at 123? First of all, nice hold. Yeah, we've been looking for the dollar CAD short for some time. You have an awesome entry there. 138.12, 138.38 was a massive zone of resistance. We turned right ahead of that. And one of the main key turnarounds, what turned us bearish, guys, if you guys remember that month, it was pretty clean. That was a very clean opening range for the month. You had an outside day reversal off the highs. And then when you broke here, it was basically a clear break of the monthly open and the monthly opening range low after making a key outside day reversal. I mean, that's like as bearish as it gets. So you were a short even ahead of that. So awesome entry. But what do you have there? He says end of wave 3. Okay, so you have a measured objective. Look, I'm not a Elliott wave guy. I'm very simplistic in my use of Elliott waves and just trying to identify the 5-3 wave count, corrective type of action. But look, I would be looking at that 2012 trendline support just because, Kelly, we've gotten so many touches on it. And that puts that target ahead of 123. I hate to see you miss it on like 30 pips just because of that. But, we have multiple touches of this. 1, 2, 3, 4. You know what I mean? Right now that comes in just ahead of 123. So watch that. As I said earlier in the webinar, we're coming off confluence support. So, even this could charge a near-term recovery. But as long as we stay below 26, you're still in that bearish trend. Right now, my whole focus is Do we get the recovery first? Ultimately, I would look to sell. Even a rally up into 2740, I'd look to sell. But right now the focus is on this 124 or 124.15 handle. Okay, so be cautious of this. If you see that rebound, don't be too surprised. The downside, I'd be watching that trend line with great interest. As somewhere I'd be interested in closing out a position such as yours. But nice hold, man. Well done. As why I ask, I always appreciate the advice. Hey, cheers, Kelly. Again, just my opinion, but I hope that helps. Karthik says, can you put the crew chart again? I need to take a snapshot. Sure. What time frame did you need there, Karthik? The daily? Or do you need both? Where's crude? There it is. Okay, so here's the daily. Like I said, I know I completely recognize this is a real messy chart, but it's what I'm looking at for now. Keep in mind one other thing, guys. We are just opening up the monthly opening ranges. A huge part of my strategy that I like to use to kind of dictate what the near-term, medium-term directional bias is. So let the first few days come off if you're not holding any positions and you're kind of a little bit hesitant. That's fine. We get more clarity as we get it deeper into the month, and obviously we have that event risk on Friday that's probably going to offer some decent volatility as well. Karthik, here's the intraday. Now you're seeing one thing I would highlight on the intraday is that you've been seeing ongoing divergence into this high, and you're starting to get signals on both sides of the 70 line. So here's your first reference point, or actually this would be your first reference point, second reference point of divergence, and here you're getting continued ongoing divergence into the highs. So is the trade losing steam into the 618? Yeah, sure. Looks like it. I wouldn't necessarily stress that 100% extension. Okay, so this is just a soft target at 49.60. I'm going to drop that for now. The opening range lows that we made in Asia, or last for the week rather, should sort of be the focus for now. Sort of near-term support there. And if we do crack that, it's been a decent pivot, but if we do crack that, the opening range lows for the week, you'd look for a drop into like 48.17. Again, would coincide with a nice decent pullback or rally rather in the dollar. So hope you got, hope that helps, Karthik, rather. Feel free to take a snapshot of that for your convenience. So that is dollar CAD. Number 6 is gold. Hey, you're more than welcome. Here's what gold looked like on the Sunday open. So we're looking for validation on this breakout here. Obviously, you guys have we've talked about this multiple times. Trendline resistance off 2011 record highs, extended off last year's high, was an amazing resistance all year. This year kind of got messy on this initial attempt here, pulled back, but it looks like we're breaking through it yet again. That's the weekly chart. Looking at it from a daily standpoint, looks like a little bit more of a definitive breakout. That trend line has offered clear pivots. Even though we've broken through it, on the way up, when we broke, we accelerated. On the way down, we rebounded there first, and then we pushed through, and once we finally clear it, we accelerated. Here we go, accelerating again. So yeah, I think it risks still another high near 1281, but the near-term outlook is what has me a little concerned. Here's how we opened up the week. 1270 was a level of resistance that we've been looking at. Bring up the chart here. As a decent soft pivot in price. And you saw that sliding parallel off of this high, basically highlighting that same region of resistance. So we basically have been governed rather by that resistance level, which is now the weekly opening range highs. So it's nice to just kind of have that overlap now. Look for support along this trend line. As long as we stay, above that, you're basically still within the confines of this ascending structure. Major or a stronger resistance, you're basically looking at that 1281. That shows up on multiple charts. Swing highs. There's a broader, longer term trend line for the channel that we were in. This had 3 touches. 1, 2, 3. There's the break, saw acceleration. The break from the underbelly saw acceleration. Decent pivot along here. That converges along those highs. And again, even on the weekly chart, 1284, which is just higher, was that reversal week close. This was the high week reversal close prior to the high that we made here, obviously, but you get the picture. So I would want to say this, the trade is broadly constructive still. Again, because of where the dollar is and because of what we're seeing, in a lot of the majors, if it were to break, higher, 1281 is still the level I'd look for as possible exhaustion. From here, I still think you risk a little bit of a pullback into that support zone before it rallies. So take that for what it's worth here on gold, but I think once we get a little bit more of a definitive opening range for the week, we'll see if we can't get that break to validate. Near term risk is lower. Inevitably, if we do go into this trend line, I'd be looking again for possible long triggers on a rebound. Any questions on gold? Going once, going twice. Oh, D, I completely missed your comment there. D, with reference to Kelly, your comment earlier on dollar CAD saying, well done, Kelly. I'm short dollar CAD from 134, also looking for 123.30. D, I love that level. I didn't even see your comment there, but I guess me and you are exactly on the same page. Okay. And that is gold. Let's move on real quick to Aussie yen. Here's what Aussie yen looked like on Sunday. Just wanted to highlight this ascending channel we've been following for weeks and weeks and weeks. We first introduced it when we first were testing the upper parallel here, which was also converging basically on this near-term channel resistance. Yes, again, last week we highlighted the uptrend while above that same level at 87.55. That's still the level to beat. We've now made a break below the lows. It kind of got sloppy in that we broke back above channel resistance, but we've settled below at this point. Still need to clear below 87.55 for this really to be invalidating the uptrend. Until that happens, you want to be cautious. Here's what Aussie yen looks like now. So if this is a legit break of this channel support, yeah, I think you could travel a little bit lower, but you basically still want to respect this key pivot at 87.55, 87.64. Same level we've been looking at for months now. It was initial resistance, very, very quick before the break, but it's been support once, twice, 3 times, and now it converges on a sliding parallel here. Support, resistance, support, converges on that level this week. Questions on Aussie yen? Looking lower for now, but inevitably do want to buy this pullback. Even momentum, strong resistance ahead of 60 even. Couldn't even stretch into 60 here. Okay, next up on tap, a quick review of Kiwi. And I remember on Sunday, I just provided you guys with the daily chart just because I really wanted to highlight the importance of this zone. I still don't really like the intraday price action. I don't really have any structure to the decline, which is kind of what bothers me. Now, this could be just a near-term consolidation, and this could be the break actually right here. But I just don't have any structure to where price is giving me any clear-cut conviction. But anyway, here's the daily chart. So we'll be looking for today for today's close. As it stands right now, if we were to close at these levels, you've made an outside day reversal off resistance. And that's always going to be initially a bearish development. So finally, looks like we may have something. The 50% retracement of the broader decline off the highs that we made from 2014 come in at 75.15. Again, we did technically get a daily close above that. We stretched as high as 75.50 before reversing, but it doesn't necessarily invalidate that resistance in my eyes. Here's what it looks like on the close basis. So look, if today's close is able to, finagle its way and actually close below 74.80, this would be the first major reversal, or let me say the biggest pullback that we've seen since last month on the 11th. And certainly, every pullback we've seen, you guys know I've been trying to play a short side trade on this forever, and we just haven't gotten any decent pullbacks. So if this is going to be the onset of it, I want to see us push below 74.50 to really validate a little bit more of a stronger conviction reversal, let's call it, in Kiwi. But I do like this thing finally, hopefully, breaking down. A way of playing this without necessarily having to be long the dollar, like I said, is that Euro Kiwi trade. So that's approaching the initial target here at 58.30. D says I'm short at 7,200. Is that right? Okay, that makes more sense. 75.20. I'm short at 75.20 and stop at your suggested few days ago at 75.60. Nice, well done. Karthik says whenever it feels it's going down, Kiwi surprises again. Man, let's not jinx it, Karthik. D's already in the trade, so hopefully it'll keep going. But well done, D. Nicely done. Yeah, I mean that was kind of a lob. In my humble opinion, this was such a big region. Honestly, I know I'm not gonna lie to you. I got stopped out on this initial spike through because I kind of pre-ran it, but we did take a couple of shorts off that region. I've been very, very nimble. I really respect this pair because I kind of took a little bit of a shellacking once we cleared this zone here. But yeah, I do think it's in a good position. Look for near-term support at 74.50. Again, there's some slope there, much longer term. I don't really want to stress this to you guys because this is way, this is kind of Jamie's territory. But the upper parallel does actually come there, and we did actually react to it initially. So that converges on the previous high day close from last year, and that's right around 74.50. D, does that help? If it closes below 94.80, yeah, 75.80. I will bring the stop to cost. Not convinced on this trade. Yeah. Yes, I would agree. 74.80. If it closes 74.80, 75.80 would completely blow us out of the water. No, that would be like long, right? Yeah, there you go. 74.80. Yeah, if it closes below 74.80, it would be a start. I wouldn't necessarily say it would be the conviction close. This would be the conviction close for me. For a couple of reasons. Again, that's the high day close from last year. You saw an initial reaction as on a closed basis here on the advance, and then once we broke, you saw acceleration. So you'd expect the same thing on the way down. You could see a rebound off that level, but if you do break it, you'd expect to see acceleration. So watch that level. Kelly says, sorry, did you have dollar yen on your list? I do now. What's up? D says, thanks. You're more than welcome. Nice trade, D. Kelly says, always enjoy hearing winning trades by our community. Thanks with the help of you, Michael and Jamie. Hey, you're more than welcome, Kelly. And again, I don't just share just my winning trades, guys. I'm more than happy to tell you where I've lost too. I mean, that's the reality of it. Like Jamie says, we highlight. That's one of the reasons that we write this weekly highs and lows. We don't want to be those guys who are just on the street, waving the flag every time we have a winning trade. No, you're going to have losers too. But that's what we use risk management for. That's why the strategy that we always entail always highlights and really stresses the use of proper risk management. And that's one of the biggest mistakes retail traders make. So keeping it on the right side of the trade is just half the job. Next up on tap, I'll go over dollar yen, but next thing I want to cover real quick is Ethereum. Actually really got a decent play. So we've been actually following this one for a while. We wanted to highlight, the broader, where we set up is basically the weekly open was highlighting 86.97 as a key area of support. You have basic trendline support off the lows converging on a 618 retracement. Okay, trendline resistance. This is the upper parallel. We saw that one spike go through, but other than that, the market has really respected that slope, and that slope converged on a 50% retracement right around 204. Excuse me, 203. The focus was on this range to start the week. Okay, with a topside breach favored. Obviously Bitcoin's got that fork going on and all the news surrounding that. So you saw that kind of surge higher. But it's interesting because you didn't see that price reflected in Ethereum, which is supposedly picking up a little bit more popularity. So we were looking for that topside breach. Here's what Bitcoin looks like now. Or Ethereum looks like right now. What was that chart? Is it 240 or 120? Okay, so you started out the week, you broke that median line there, you drifted a little bit lower, but you turned and held well above 186.97, which is the bullish invalidation level. There's the crack of resistance, and what you want to see is what exactly we got. Price accelerated. You didn't see a drift higher, didn't see dilly-dallying, very low tolerance. Test, break, boom. You're right off to the races. Initial target was this median line here, followed by this sliding parallel here, followed by the actual median line, and that's exactly where price found resistance. So super clean on the trade here. We want to raise our bullish invalidation level, okay, from that 186.90 level to 203 at this point. As long as we stay above that level, we're going to continue to favor alongside. A breach from here, you still have to contend with 235. It's still a big level in just swing terms, even 618 retracement of the entire decline from that high. So that's sort of the first barrier. You've seen obviously some major reversals off that level. Beyond that, look for the median line and obviously the highs. But looks pretty good here. Looks pretty good. And a quick look at Bitcoin, again, that's sort of just seeing a whole lot of volatility. There's going to be a lot of headline news with this whole fork and split that they're looking to do. Again, that's going to kind of drive price action. You're kind of testing the yearly highs here. So for Bitcoin to advance or to really break out, I think it would need a little bit more of a catalyst or a steam push. But a trade, I think you broadly want to stay constructive still. It's just at resistance. It's just at resistance. Questions on any cryptocurrencies? That is number 9, or 6, 7, 8, 9. That's number 10. Number 11, let's go over real quick, dollar yen. So the daily chart for dollar yen is not really what I'm focused on, and you guys know that. I've told you this before. I don't really have anything as support until down here on the daily chart. It's even the low day close for June. So there is something to look at lower. But the near term, I highlighted yesterday 110.30. And while we did sink well below, tested basically the 110 handle, with quick recovery, and we're right back above it. That completes 100 off the high here, just real near term from the advance off of this is last week's high. But also, basic channel resistance, test, break, saw acceleration, a little bit messy on the bounce here, but support. So what's going on here? I'm basically just looking to play the opening range in dollar yen. If the opening range breaks to the upside, specifically above 111, essentially, you'd look for a rally right back towards that 111.50, 111.60 range. This was huge and very pivotal in price, and has been for some time. But I'm really unsure on how to play dollar yen. Who is this for? Whoever was asking about dollar yen, Kelly. That's what I'm looking at with dollar yen. I don't really have a strong opinion either way. A very strong reactor to U.S. Data, which is why this Friday, I think this pair is going to give us clarity on the directional bias from there. But it was pretty clear last month. Here's last month's opening range. You opened the month, you rallied into a high right into the 11th. You came into the monthly open. You kind of held that for a day before breaking below, tested it as resistance, and where did we close the month? Right at the lows. So, the opening range strategy tends to give us some clarity here. The opening range for the previous month also, you set the opening range basically in the first 7 days. We didn't break until late that month on the 26th, but then you spiked into a high right before you closed the month. So largely speaking, I'm kind of going to take a little bit more of a cautious approach on the near term, though. If the opening range does hold the low that we made in overnight, if we break the high, I think I'll be looking a little bit more assertive towards a rally towards the 100-day moving average. This pocket right here, which is the same as this zone. Does that help, Kelly? On dollar yen. Okay, any other questions? Says thank you, you're more than welcome. Any other questions? So it's worth just really quick looking at the Aussie. We looked at Aussie yen. Look, the RBA came out with a little bit more of a cautious approach. Now, they did cite the strength in the Aussie being something that they're looking at. And if strength in the Aussie persisted, they would need to adjust their inflation forecast. And if that happens, they're basically saying that the stronger Aussie is keeping inflation down. And you're going to start to hear this echoed across a lot of these central banks, specifically the pairs that have seen wicked rallies. New Zealand, you're going to start hearing that. Australia, obviously, has just cited it yesterday. The BOE, it'll be interesting to see what their comments are heading into Thursday's super inflation and interest rate decision. So, they were very much more cautious in trying to talk down the Aussie with verbal intervention. But it could take a little bit more downside here. I wouldn't be surprised. We're still holding those long. So, if we do see a break below that former median line resistance, that's for me what would change things basically here. This is what would kind of change the near-term picture for Aussie and possibly see a bigger spill to the downside before we correct. But just keep that in mind if you're looking for fresh Aussie exposure, if you're not currently holding the swing trade, something to keep in mind. Okay, we'll wrap it up there if there are no other questions. Again, we'll see you all tomorrow morning. I'll give you an update of all the sterling crosses ahead of the BOE. Keep in mind, at 10 o'clock, you do get the release of ISM data here in the United States. Could offer some more volatility, but broadly speaking, the dollar index is basically flirting with some pretty dangerous territory down here. So we'll look to see how we open up the month. Best of luck trading. See you guys tomorrow morning. Cheers.